important chapters that entire I'm going to share with you. Yeah, see this. Yeah, this is our syllabus which we have on our subject. So black one talking about the aggregation of reductions. So that black one talks about the aggregation of deductions. Actually, this black we classified into 2 units. We classified. And first unit is clubbing of income. Second unit is set-offs and carry forwards of losses. So first clubbing of income means already I explained in the first class. Again, I will explain with just overall. Clubbing of income means generally we have the 5 sources of incomes. First one is the salaries. Second one is the house properties. Third one is the income from business or profession. Fourth one is capital gains. Fifth one is income from other sources. Generally, clubbing of income means what? First, we are going to club the incomes within the same heads of incomes. For example, when the assessee having more than one houses, so when he have 2, 3 houses, so that time first club the income of house property incomes. Various sources of house properties, you can club that income and you can give the one figure, that is clubbing of income. Not only that income from house property, even the income from business or profession also. So business or profession means what? When they have different kind of businesses, more than one business. For example, one business is, there are 2, 3 business are there. One business is loss, another business is, another 2 businesses are having the profits. This last business we can set up from the within the same head of, then we can remaining income we are going to show in the total income. So clubbing of income means what? First internal adjustment head wise we are going to do. Then we are going to find the total income. So after that set-offs and carry forward means what? So head wise when there is any loss is there, we have a choice to set off within the head. Even though there is a loss, we can set off from the remaining other heads, conditions applied. So still there is any loss, we are going to carry forward that losses. So it means what? This is set offs and carry forwards. So this one already I explained in the previous classes. So next one, after clubbing of income, after set-offs and carry forward that incomes. Next one is deduction from the gross total income. Gross total income means what? Aggregate of 5 heads of incomes. So aggregate of 5 heads of incomes. So first we have to clubbing of the income, set up the carry forward income. After totaling of that entire income, that is called as a gross total income. From that gross total income, we are going to deduct some deductions which are allowed by the income tax department. Actually, these deductions under section 80, we are going to discuss. So all the deductions we divided into 2 chapters, that is unit 3 and unit 4. Deduction from the gross total income and deduction from the deduction from gross total income 1 and deduction from gross total income 2. So it means what? Whatever the deductions are there, from 80C to 80 TTA, 80 E, up to 7 deductions we included the unit 3, and remaining deductions we included in the deductions chapter 2. So once you find out the deductions, you can deduct from the total gross income, then you will get the taxable income. So up to black 2, we are going to do that only. Next one is the black 3. Black 3 talks about the computation of total income tax. This is very important chapter in this subject. So if you are perfect this black, you are able to write the paper more than 60% also you will score. So here, this black we classified into 3 categories. Black 3, 3 units are there, 3 chapters. First chapter, unit 5, computation of total income of individuals. So income computation of in total incomes of individuals means what? So whatever this clubbing of income setups and carry forward after doing this. So after they are going to give the 5 heads of income. So from under the 5 heads of income, we are going to allow the deductions. So after deduction of these headings, that is total income you will get. It is only for the exclusively we are going to here only for the individual's taxable income only we are going to calculate. So here 5 heads of income, they will 5 heads of some losses also they will give. The total income we are going to calculate for the individuals. After 5th unit, unit 6, computation of total tax. So once you know the total income of the individual person, you have to calculate the tax. That is nothing but a computation of tax liability. So tax liability, how we are going to calculate? So we are going to calculate as per the income tax slab rates. So whatever slab rates are applicable, so whatever assessment year is there, whatever previous year is there, according to that slab rates, we have to explain and we have to calculate the tax liability. So unit 7 talks about these 5th and 6th related topics, revisionary problems. So here 90% of the syllabus is covered by these black 3 only. So next one is the black 4. Last class I explained about the assessment. So assessment again black 4 we classified into 2 chapters, that is income tax authorities, assessment procedure. So income tax authority means what? Who is the responsible power or responsible person who is going to collect the tax? What is the powers of the tax authorities? What are the functions of the tax authorities? So who is going to involve, who appointed them, how they are going to work, what is the functions of them. So that entire administration tax governance process we are going to do in the income tax authorities. Next one is the procedure in assessment procedure. Assessment procedure, at what time we have to submit, what is the last date for the submission of income tax. So ITR 1 talks about what, ITR 2 talks about what, ITR 3 talks about what. So here that entire procedure we are going to discuss. So after that, the black 5 talks about the appeals and revisions. So appeals means is there any problem to whom we have to apply. So how they are going to collection of tax and lapse of consequences. So this black 4 and black 5 talks about the governance of income tax department. That is the administration purpose, that rules and regulations which are framed by the income tax department, that only we are going to discuss. So already up to 4 blacks I completed in the previous classes. Now I will explain the unit 10 and unit 11, unit 12. So let us see that appeals and revisions. Again, I want to share. Yeah. Yeah, what is the main purpose of studying this chapter? What is the objectives are there? What are the topics we are going to cover? So appeals and revision, this chapter covers about the appeal to the deputy commissioner, appeal to the commissioners, appeal to the appellate tribunal, appeal to high court, appeal to supreme court, and when we are going to approach them, what is the process to approach them, that all are we are going to discuss. So before discussion of the topics, what is the objective to discussion of this chapter? So here, first here list out the orders of assessment officer against the assessee can appeal to the deputy commissioner and commissioner appeals. To explain the appeals are made to the appeal tribunal. So next one is the appeal to what is the discuss the provision of relating to the appeal to the High Court and Supreme Court. So describe this revision may be Commissioner of Income Tax. So this one we are going to discuss. First one is the appeal to the Deputy Commissioner. So appeal to the Deputy Commissioner. This one also last class I explained. Again, I'm going to talk about it. So, assessee granted to right to appeal the deputy commissioner against the following order assessing officer other than deputy commissioner. So, what situations they are going to appeal? An order to against the assessee, where the assessee denies the liability to be assessed or ordered under section 143 or 144, where assessee object the amount of income tax assessed or amount of tax determined by the or amount of loss computed status under the is assessor. An order assessment is reassessment or competition, recompetition under section 147 or 150. So an order to rectification of mistake enhancing the tax liability or reducing the refund. An order to treating the assessee as a agent of non-resident. An order to making the assessed liability respect of his procedure to tax liability. An order to relating assessment after partition of Hindu undivided family. An order to refusing the registration or cancelling the registration of the form. So these are all the situations we can appeal to the deputy commissioners under section 143 to 144 and appeal to the commissioner appeals. So when it is going to appeal? So under section here, under section 144A, we are going to appeal. The following situations we are going to appeal. Instead of appealing the deputy commissioner, we are going to appeal the commissioner. In at what situations we are going to appeal? That is an order to given under the appeal order deputy commissioner where such order is made deputy commissioner. Any order against a closely held company imposing the additional income of it. Any order imposing penalty made by the commission. An order to assessment made by the basis of direction of issued by the deputy commissioner under section 144A. An order imposing the penalty by the AO with the prior approval of the deputy commissioner. An order by the deputy commissioner relating to rectification of mistakes. An order to imposing the penalty account failure of account audit. An order to made by the assessing officer in case of which board may be direct. And these were situations we are going to appeal. What is the procedure of filing the appeals? The appeal shall be presented within the 30 days. The receipt of the order against the appeal preferred, it shall be prescribed form. The Deputy Commissioner of Appeal or Commissioner of Appeal, after hearing the assessee and income tax department, is required to pass the order in writing. The order should be communicated to the assessee and the Commissioner of Income Tax. What is the powers of Deputy Commissioner Appeals or Commissioner of Appeals under section 251? So here, in a appealing of against the order assessment, may be confirm or reduce, enhance the annual assessment, or he can set aside the assessment referred through the in case of back to the assessment officer for the making of fresh assessment accordance with the direction of given by him. In appeal against order imposing the penalty, he may confirm or cancel such an order or make variation in the amount of penalty. In a order, other cases, he can pass the order he has to think fit. So this is the situations they have the powers for the appealing of deputy commissioner or commissioner of appeal. Next. Next. Appeal to the appeal tribunal. Appeal tribunal is the final fact of finding body. On the fact, whatever if it is say final or no appeal lies in anywhere else matter of facts. The appeal to tribunal is second court of the appeal. If the assessee is not satisfied with the order of the deputy commissioner of appeal or commissioner of the appeal, he may be prefer the appeal before the appeal tribunal. Similarly, if an assessee not satisfied with the order of deputy commissioner of appeal or commissioner of appeal, he may be with the approval of the commissioner of income tax file appeal before the appeal of tribunal. Actually, any problem is there for the assessee. So when they not satisfied with the order of the deputy commissioner or commissioner of appeal, so finally they are going to meet the appeal of tribunal. The central government shall be constitute that appeal tribunal here appeal against the order of DC, Deputy Commissioner of Appeal, Commissioner of Appeal. It consists judiciary account member, the judicial member as a president. There are many benches of the tribunal scattered over the country. It Bombay alone there are 4 branches. So every appeal to tribunal shall be filled within the 60 days of the date of order sued by the appeal of the against. An appeal tribunal shall be prescribed and form and be verified prescribed for manner shall be accompanied by the fee 500 rupees. If the total of the assessee computed the assessing of 1 lakh rupees up to 1 lakh rupees the more than 1 lakh rupee, but up to 2 lakhs is the 1500 if the appeal filled by the see sorry here fees they based on their amount they are going to collect the fees. So 500 if the total amount is computed up 1 lakh, if the amount is more than 1 lakh up to 2 lakh 1500 if the appeal filed by the assessee. If the appeal is preferred by the department not paid, the parties here to tribunal order to pass. The decision may be majority of the decision in case of 2 members are hearing the in case of difficult. So simply here they're talking about the what is the range of the case based on that case that appeal fees also we have to produce. So appeal to High Court, appeal to Supreme Court. So appeal to High Court on getting of decision tribunal either aggrieved parties may appeal to tribunal prepare the statement of the case refer to the question of law or to the High Court of the decision. This application shall be accompanied by the fees 10,000 rupees. Commissioner is not required to pay this amount. If the appellate tribunal is refused the state case, then ground to no question of law may be direct appellate tribunal of prepare that in case of forward decision. The High Court upon the hearing such case should be decided to the question of law decided. So Supreme Court. If any courts, see, this is the law judiciary from deputy commissioner to the commissioner, commissioner to the appeal tribunal to the high court to the Supreme Court. So up to getting of justice, you can have a chance. You have a choice to approach them. So this is the story of appeal to the revision. Appeal to the revision only you have to remember only 5 points. That order that is first appealing of deputy commissioner, then commissioner to deputy commissioner appeal, commissioner appeal, after that tribunal appeal, after that high court appeal, after that Supreme Court appeal. This is the flow of chart which we are going to follow. Next. Yeah. See, collection of tax. Collection of tax generally, what is the procedure to collection of tax? So what is the structure of collection of tax? So these are also we are going to know that single page, right? See here, collection of tax. So in this unit, we are talking about the introduction, deduction of tax at source, advance payment of tax, refund, recovery of tax. So only these four are very important. So about these four only introduction will cover. So what is the main objective of this chapter is to explain the rational and deduction at source and describe the procedure of recovering of tax. So first we are going to talk about the this chapter we are going to talk about the deduction of tax at source, advance payment of tax, tax and assessment. So one by one we are going to discuss. Yeah. What is the meaning of deduction of tax at source? So in order to the reduce the cases of tax evasion. So tax evasion means what? Whatever some people sometimes they are going to escape the tax. They are going to give the false information, and to avoid the tax, they are going to submit the fake documents also. So when they did that individually, sometimes companies and organizations will going to pay the tax behalf of their employees. So that situation, the deduction of tax we are going to observe. So in order to reduce the cases of tax evasion, the Income Tax Act has made a provision to collect tax at source in certain specified cases of incomes at the time of when the income is receiving them. Earner receives them. Under the scheme, persons deduct tax at the source and deposit the same with the government treasury within the stipulated time. The receipts of income through the he gets only the net amount. So means what here? For example, I running one company. So in my company there are thousands to employees are working. So thousands employees have to pay the tax. So instead of paying of total gross salary to them, from whatever the earnings are there by the employees, so their tax I'm going to deduct before payment of to them. So whatever I deducted at the source, that amount again I'm going to deposit in the treasury within the stipulated time period. So here in that time again the earners will need not to pay the any any tax. So that is the process deduction of tax at source. The recipient income through the he gets only the net amount is liable to tax on the gross amount. The amount is deducted at source is adjusted against the final tax liability. So this is the deduction at source. The specified cases of income where the tax is deducted at source, like salaries, interest on securities, dividend, interest on other than interest securities, winning of lotteries, race, horse races, payment of contractors, insurance commission, okay, payment of commissions, payment in respect of national savings scheme, the payment of account purchase, mutual funds or UTI also, other source charitable under act of the pay non-resident. So these are all the situation. So let us discuss one by one. So first one is the salaries, section 192. Any person responsible for the paying of any income chargeable under the head of salary. So it is required to deduct at source on the amount of payable. The tax is to be calculated at the rate of prescribed final year. The payment made by the estimated income assessee under this head. While estimating income under this head, the amount deductible under section 80cc, 80ccd, 80ccg, 80d, 80ddb, 80g, 80gga, TTA, ITU. So these all are one by one. Again, I'm going to explain 80ccc, that is qualified savings. 80ccd is the qualified savings recognized pension. 80ccg, that is the aggregate of that qualified savings. 80d is the medical insurance premium. 80DD is the dependent medical insurance premium, and 80DDB is the any disability medical insurance medical facility. 80 is the educational loan. 80G is the donations. 80GG is the donations for the trust. 80TTA interest on qualified savings. 80U is the dependent for a handicapped persons the amount. So this all are we are going to be adjusted before the deductions of salaries. Where the persons of employees stimulated to more than one employer, or where the has held successfully implemented by more than one employer, tax and deductions shall be deducted that the employer assessee may choose. So sometimes some employees they are going to work more than one employee. So from which employee they are two deducted source, they can employee have a choice to choose. So according to the directions, the employees will be going to deduct. Interest on securities. See, interest on securities generally there is no tax deductible at the source of from interest payable. So 4.5. Some incomes, some interests we no need to pay the any tax. Some other income in interest only we are going to pay that. That is not that much required. Next, dividends section 194 TDS is 10.3%. No tax will be deducted. So when the final does not exceed 2,500, interest other than the interest of securities 194 deduction at source, non-cooperative assets, and winning from the latter is cross pursuit section 194G, any other sum of section 195. So these all are just when we are going to earn when we earn the money. So before taking that earning amount, that payment, that source of earning pay, the so the there when where we are going to earn, they people before payment of the earnings, they are going to deduct the tax. So next one is the advance tax payments. So advance tax payment, the scheme advance payment tax is also known as a pay as you earn scheme. So pay as you earn scheme. This is means the assessee has to pay the tax advance particular final year is estimated income. See, all for example, if you are working in one organization, your monthly income is 1 lakh, almost 12 lakhs you are going to earn end of the year. So your limit is for up to 3 lakhs only. So it means what remaining 7 lakhs is the taxable income. So if the once the year is completed at a time, tax payment is difficult to pay for the assessee. So that is the reason when your income is going to cross your exempted income, organizations what they're going to do, they are going to deduct tax monthly. So that is advance tax payments. Again, it is going to be adjusted in the final tax filing returns. When that person is become liable to pay the tax advance section, advance tax. So actually section 208 talks about the advance payment of tax. So when does a person become liable to pay? Every person is liable to pay the advance tax. If the tax payable by him particular is year. If the rupees more than 10,000 are all times incomes, including capital gains, winning lotteries, cross fraud, muscles liable to pay for the tax of advance. Competition of advance tax. Generally, competition of advance tax. Income lottery or other winning is 30% we are going to pay. Long-term capital gains 20%. In other cases, first 250,000 exempted and next 2 lakh 50. This is the old slab rates. Next 2 lakh 50 is the 5%. And next 5 lakhs is the 20%. Balance of total income is 30%. Surcharge is applicable when the 50 more than assessee having more than 50 lakhs income. 10% the surcharge also we are going to pay. So again, that health and education 6 to 4% is we are going to pay. Here they mentioned that 3%, that actually it is the 4%. The payment of advance tax by the assessee on his own account. The payment of tax pursuant the order to assessing officer, the competition of tax liability officer. This is all the procedures which we have.
Okay, I found this on the web for which we have. Check it out.
What is the meaning of refund? So refund means to pay back. Refund is the when the tax paid by the assessee more than actual tax. So refund is a nothing but a when we are going to pay the tax more than our actual tax, that again whatever excess we paid, we have a right to take the refund. So that is refund of tax. Just refund of tax arose due to excess deduction of tax at source, excess payment of advance tax, excess payment of self-assessment, reduction of the tax liability, result appeal to revision, and grand double taxation, deduction of tax liability at source rectification. So these are all the situations we have a refund. So who can claim the refund? Section 238. Generally, refund claimed by only a person who made excess payment of tax. So, how to claim the refund? Every claim for the refund made by the prescribed format form number 30 and the prescribed manner, the claim should be accompanied by the return of income if the claimant not furnished the such as a return earlier. If the total income of the claimant consists the interest on security dividend from the income tax. Interest on refund. So here simple interest on 0.5% every month, the part of month 1 April to refund is granted the payable of assessee central government delayed of refund. So when we are going to pay the excess tax, so that amount also you are able to receive. So when the government is not able to pay the within time, next to assessment year April onwards, 5% is they are going to pay the interest for the assessee. Set of surrounding of outstanding income tax. Section 245 talks about the way the refund is due to assessee respect of particular assessment year. The same time the sum of may be penalty due by the respect of some assessment year tax authorities. So recovery of tax. Recovery of tax. The tax liability of assessee respect of income particular year determined when the regular assessment made. If the aggregate income of the tax collected at source, advance payment of tax, self-assessment falls to short taxable regular assessment year. The assessee is required to pay the tax demanded within the stipulated time. The payment of may be also made in installments, assessee period approval of assessment of officer obtained. If the assessee failed to pay the tax within the stipulated time, he is treated as a assessee default. He will be liable to interest and penalty. See, generally on on our income, the tax liability assessee in respect of income particular year determined when the regular assessment made. If the aggregate amount of tax collected at source and advance payment tax and tax paid under self-assessment falls to short of tax payable, regular assessment AO issue the demand notice of the balance. See, simply, when our income is more than our exempted income, we have to pay the tax liability. So if the tax is not going to pay on time, that time the assessment officer will give the uh, notice for the assessee. The assessee required to pay the tax demand within the stipulated time period, whatever time period allowed by the department. So that stipulated time only they have to pay. If they are not able to pay that, they are going to charge the penalty and interest also we have to pay it. So mode of recovery section mode of section. Section 222 talks about the mode of section recovery, where the assessee default tax recovery officer shall be followed then. Attach the sales assessment mobile immobile property and appointing the receiver taken arrest the assessee is donation of prison. So that is the legal procedure they are going to be take. So this chapter talking about the tax deducted at source, deduction of tax at source, advance payment of tax, recovery of tax, penalties. Yeah, next one is to topic is yeah, last topic is there. Next class I am going to explain the last topic, lapse and consequences. You go through once. Yeah. Next one is just I want to share the syllabus. Just do it in a time. Oh God. Yeah. See the syllabus. So now we discussed collection of tax, appeals of revision. In yesterday we discussed assessment of procedure, income tax previous class. So these problems already explained. Only the topic left the unit 12 in black 5, lapse and consequences. So that class I am going to explain the next class. Just I will give the contents, what are the topics are there in this chapter. Just I will show it. Just go through once. Share. Yeah, I'm sharing. So this is very small topic actually. Lapse and consequences. Oh, see, lapse and consequences means what? Within the time when we are not able to pay our tax liability, what we are going to face the consequences. So that only we are going to discuss. And what is the offenses are there? What is the how to what is the prosecution is the way prosecution? And this one is very simple topic. Just for idea purpose only we need to discuss. Okay. Yeah. Failure. See, lapse and consequences. See, default penalties. What is the when we are going to pay the default penalties? Failure of pay to tax. If the assessee failed to pay the specific amount of tax per notice demand, he shall be liable to penalty, which the assessing officer may from time to time direct. However, the penalty shall not exceed the amount of tax due. So whatever tax amount is there, less than that only they have a penalty, but more than we are not going to pay the any penalty. The failure to tax on self-assessment. If the assessee failed to pay the amount of tax on basis self-assessment, he will be liable to penalty to be imposed 1% of tax due on the self-assessment each month of default. So whatever the tax liability is there, 1% tax, again we have to pay the penalty. Failure to comply with the notice. During the course of assessment, sometimes assessing officer required to produce the amount, the book and document, the purpose of issue the notice by him. If the assessee failed to comply with such a directions without reasonable and cause, a penalty equal to sum of not less than rupees 1,000 but not more than rupees 10,000. Each default shall be payable by the assessee. Such penalty shall be addition to the tax payable by the him. So failure to comply with notice. And cancelment of income, where the person is concealed the particular income or is furnished the inaccurate particulars of income, he is liable to pay the penalty sum of between 100% or 300% of tax sought to be owed. The failure to keep the maintaining of retain the books of accounts. So if they fail, if there is a provision to certain cases, assessee has to keep the maintain the accounts and document respect of the previous year. Such documents have to maintain some prescribed period. If assessee failed to complete with the requirement of the person, he has to see simply that accounts books, whatever the records are there, up to certain period as per the direction of income tax department, they have to maintain. When they are not able to maintain, they penalized with the amount of rupees 25,000. Failure to get the account audited. So if the account is not audited for particular business amounts, so that time also they are going to charge the 1,50,000 penalty. The failure to give the notice discontinuancy. So discontinuancy means where whenever a person discontinues the business profession is required to give the notice. See, for example, you are running the business, you in between the assessment year only you stop, between the previous year you stop at that, between the previous and assessment year you stop the business, that information you have to give the assessing officer. So if you are not able to give the assessing officer that whatever the half of the percent of the total sales, you have to pay that penalty or 1,50,000 penalty, whichever is list, we have to pay that. Failure to give the notice of discontinued business. So already discussed. Next one, failure to comply with the provision of permanent account. See, if you doesn't have that PAN card also, you have to pay the 10,000 penalty. Penalty for non-filing returns. Under section 139, if you are not able to pay the returns, you have to pay the 5,000 rupees. Fail to deduction at tax at source. And failure to helping of collection of information. So these all the situation they are going to pay the penalties. So this is the story about the offenses. Just you go through once. If you have any doubt, you can contact department B.R. Ambedkar Open University Academic Black. So I am available there. You can approach me also. So now I am stopping. That's our syllabus is completed. So go through once. Wish you all the best and prepare carefully and write exams well.